Let's be honest, guys. Tax season, it's usually a massive headache. You've got the jargon, the constantly changing rules, and that lingering fear that you're somehow miscalculating the whole thing. It's honestly enough to make anyone's head spin. But what if I told you that figuring out your exact tax liability, and more importantly, your final take-home pay, could be completely stress-free? Well, welcome to This Explainer. Today, I am absolutely thrilled to walk you through the ultimate guide to calculating your take-home pay for tax year 2026. We're going to be using a brilliantly simple Excel tool that literally does all the heavy lifting for you.
Okay, let's dive into this. First things first, it's incredibly important to establish our timeline here. In Pakistan, the financial year we're looking at, tax year 2026, runs exactly from July 1st, 2025, right through to June 30th, 2026. And the great thing is, this tool is meticulously updated with all the latest Federal Board of Revenue, or FBR, regulations specifically for this exact window of time.
So, we've laid out a clear kind of data to dollars roadmap for our explainer today. We'll be hitting Section 1, Salary and Allowances, then Section 2, Valuing Perks and Benefits, Section 3, FBR Slabs and Surcharges, Section 4, Exemptions and Tax Credits, and wrapping up with Section 5, your net take-home salary. Calculating your net pay is really just a logical sequence of these easy steps.
All right, Section 1, Salary and Allowances. Entering your baseline gross income.
So, this is the very first phase of the calculator, where we gather up all your cash inputs. It's basically the foundation of everything else that follows. In the Excel tool, you'll just enter your data sequentially. Step 1 is super simple. Pop in your basic monthly pay, and the tool automatically annualizes it for you. Step 2 covers your regular monthly cash allowances. We're talking things like house rent allowance, medical, conveyance, or utilities. And finally, Step 3 is where you add in any annual performance bonuses, commissions, or overtime pay you might get. The calculator just neatly tallies all this up into your gross annual cash salary. Easy, right?
Moving right along to Section 2, Valuing Perks and Benefits. Now, what's really interesting about this slide is how we translate non-cash perquisites into actual taxable numbers.
Okay, now we have to handle the slightly tricky part, the non-cash parts of your compensation. Because, well, as far as the tax authorities are concerned, a benefit in kind is just as taxable as cold, hard cash. We call these benefits perquisites. So what is it? A perquisite is simply a non-cash benefit provided by your employer. Think along the lines of a company car, free housing, or employer-paid utility bills. But hey, pay close attention to this rule. These perquisites are only taxable if your total basic salary exceeds 600,000 Pakistani rupees for the year. If you make under that threshold, you don't even need to worry about taxing these perks at all. It's a real game changer for a lot of people. Let's look at one of the absolute most common perquisites out there, a company car. The way this is valued changes dramatically based on how you actually use it. If that car is strictly for official use, meaning, it stays at the office, its perquisite value is literally 0%. It doesn't add a single rupee to your taxable income. However, if you get to drive it home on the weekends, which classifies as partial private use, the calculator is going to add 5% of the vehicle's total cost to your taxable income for the year. And if it's wholly for your private use, well, that jumps up to 10%. Don't worry though. The tool has a dedicated sheet just to calculate all of this for you seamlessly.
All right, Section 3, FBR Slabs and Surcharges. This is where the tax math actually happens. So your cash income and your perquisites have now been combined into one big gross figure. Now the FBR rules step in to convert that income into your actual tax liability. So the crucial point is that 600,000 PKR number. I've mentioned it before, but it definitely bears repeating because it's literally the bedrock of the Pakistani tax system. The first 600,000 rupees of everyone's annual income is completely, 100% tax-free. It is your baseline exemption limit for tax year 2026.
And right here, we see exactly how the FBR taxes income that goes beyond that 600,000 limit. The system uses these 6 progressive slabs. It's kind of like walking up a staircase. As your income steps up into a higher bracket, only the amount within that specific bracket is taxed at the higher rate. But look closely at slab 2, for income between 600,001 and 1.2 million PKR. In this budget for tax year 2026, the tax rate for this specific slab was generously reduced from 2.5% all the way down to just 1%. That's great news. From there, it scales up, reaching a top marginal rate of 35% in slab 6 if your income is over 4.1 million PKR.
But wait, there's a pretty major caveat here for high-income earners. If your taxable income crosses the 10 million PKR threshold, you absolutely need to be aware of a heavy surcharge. Crossing this line automatically triggers an additional 9% surcharge on your income tax. The calculator monitors your total automatically, so if you do cross that 10 million line, it just factors the 9% surcharge right into your final bill. No surprises.
Okay, Section 4, Exemptions and Tax Credits. And this brilliantly illustrates how you go about lowering your final tax bill entirely legally.
Guys, this is where you can actually keep more of your own hard-earned money. We've calculated the tax owed, sure, but before you pay a dime, the system allows you to apply certain credits and exemptions. The tool includes dedicated inputs for these legal deductions. First up is the medical allowance exemption. You can exempt up to 10% of your basic salary, but there's a catch here. This only applies if your employer does not provide a separate medical reimbursement facility. If they reimburse your medical bills, well, your medical allowance is fully taxable. You can also deduct the actual amount of zakat paid under the Zakat and Ushur Ordinance. If you make donations to FBR-approved nonprofits, you can claim a tax credit limited to 30% of your taxable income. And finally, there is the highly sought-after teacher and researcher rebate.
Let's actually visualize that specific rebate for a second, because it is massive. If you qualify, the teacher/researcher rebate slashes your final tax bill by a full 25%. It's huge. However, the eligibility rules are pretty strict. It applies to full-time educators or researchers at recognized nonprofit educational institutions that are approved by the Higher Education Commission or a Board of Education. Importantly, though, the regulations specifically state that it does not apply to medical professionals who also maintain a private practice. But if you do qualify, just entering a 1 in the calculator instantly lops 25% right off your tax liability.
And finally, Section 5, your net take-home salary. The final, all-important number we've been building towards.
So we've added up the income, we've valued the perks, applied those tax slabs, and deducted our credits. When you scroll down to Section 8 of the tool, the whole shebang is summarized beautifully for you. It outputs your net annual tax liability, which is the total amount you owe the government for the year. It shows you your monthly tax deduction, which is super helpful so you can verify your pay slips. It even gives you your effective tax rate, which is the actual percentage of your gross salary that ends up going to taxes. But most importantly, it gives you your net take-home salary. That is the actual real-world cash that is going to land in your bank account every single month after all those FBR obligations are met.
So, I want to leave you all with this one question. Are you maximizing your tax credits for tax year 2026? Look, the Excel calculator we explored today is a phenomenal, totally stress-free tool that does all the complex math perfectly. But remember, the tool can only calculate what you actually tell it. Claiming the right exemptions, documenting your donations, and knowing exactly how your company car is valued, that is entirely in your hands. I highly encourage you to review your allowances and your donations before you file, plug them all into the calculator, and see exactly where you stand. Thanks so much for joining me on this explainer, and hey, happy calculating!